Thanks for clicking! London's real estate market showed a bit of an uptake in July. This according to stats released by the London and St. Thomas Association of Realtors.
It begins.
Well, I said a bit of an uptick. We still have the highest level of inventory that London's seen in July for the past 12 years, with the most inventory coming to the market, again, that London has seen for the past 12 Julys. But, as we'll see today, there are some marginal signs of a rebound. Nothing worth getting excited about, but definitely something to keep an eye on heading into the fall. So what I want to do today is go over London's real estate data for the month of July, take a look at the apparent rebound, and then discuss some implications going forward. Fixed mortgage rates are starting to come down following the drop in Canadian bond yields. How this will affect London's real estate market remains to be seen, but we will obviously continue to have updates out on London's market on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. First up, the benchmark price. The benchmark price, that's the price of a home that represents the most popular set of features, and that was down, though marginally, in July. June's benchmark was $580,700, and that dropped almost $2,000 to $578,900 in July. So that's about a $2,000 drop since last month, but a $40,000 drop since this point in time last year. With that said, the average price was up much more substantially. June's average price was $641,000, and that bumped almost $12,000 to $652,272. So that's a $12,000 increase since last month, with the average price up $7,000 since last year. And the median price was up as well. The median, if you'll remember, that's where half as many homes sell over that price and half as many sell under. London's median price in June was $580,000, and that bumped up $23,000 to $603,000 in July. So that's a $23,000 increase since last month, still down about $3,000 since last July. And with the average and the median popping up along with the benchmark dropping, that tells me that more of the higher end stuff sold in July than some of that lower sub $500,000 inventory. And we can see further downward pressure on prices when we look at the sales to list price ratio, which measures by how much over or under asking a home sells. So if a home is listed for $100,000 and sells for $95,000, the SLPR would be 95. London's SLPR in June was 97.9, and that dropped to 97.6 in July. And what that means is that homes are still selling for well under asking price, which means you can and should have a finance condition in place to make sure you don't get sued because you overpaid and can't close. Finance conditions, home inspections, if your realtor can't or won't protect your financial interests, get a realtor that will. No word of a lie, I saw that guy at the driving range last week. Bra quote and all. Make sure you have the finance condition. And then finally, the months of inventory measurement, the MOI, which measures if no more homes came to the market in London, how long would it take for London to completely run out of homes for sale. June's MOI was sitting at 4.3, and July's is still sitting at 4.3. So no real change in the relative level of inventory sitting on London's market.
It started.
So we have the benchmark down about $2,000, the average up about $12,000, the median up over $20,000. Homes are selling for more under asking, and we have an unchanged relative level of inventory. With all of that said, the number that's making the headlines, the sales numbers, with London sales coming at 482, the highest sales numbers London has seen in July post-pandemic. And further, while sales did slow month over month between June and July, sales usually slow between June and July, but this July, they didn't slow by nearly as much as they should have. Over the past 12 Julys, sales usually drop by an average of 11%, yet sales last month only dropped by 2%. And I think the increase in sales in July is a bit more telling if we put it into context. 1 year ago, fixed mortgage rates were pretty similar to where they are right now, and the Bank of Canada's policy rate was 175 basis points higher. So fixed mortgage rates weren't exactly better than they were last year, yet, as we saw, sales were much higher. This tells me that this isn't so much an increase in affordability as it is an increase in positive sentiment. So there are some definite, evident, observable increases in sales in London in July, with LSTAR chief Dave Marsh crediting pent-up demand and tariff fatigue for the increases. Which, I mean, pent-up demand, yeah, probably, but we heard the same thing at the beginning of the spring market in 2025, we heard it in 24, and we heard it in 23. Pent-up demand is like the go-to for any realtor for anything.
I'll learn the lines real fast.
Tariff fatigue, yeah, I think that's probably part of it. We've yet to see the full effects of the Trump tariffs. We've yet to see the full Trump tariffs. And although I wouldn't say we're out of the woods quite yet, the effects obviously haven't been felt, so buyers may think that this is much to do about nothing. With all of that said, let's put all of this into perspective. Sales are definitely up. We are seeing an increase in activity, but it's an increase from massively low numbers. Sales are nowhere close to where they were even pre-pandemic. Further, new listings are popping up right along with the sales numbers, with new listings coming in at 1,150, the highest number of new listings London's seen in July for the past 12 years. And the increases in new listings aren't where they should be either. Over the past 12 years, London usually sees a 9% fall in new listings from June and July, but this year they only fell by 4.5%. And all of these new listings combined with low sales numbers leads to an awful lot of active listings, coming in at the highest level for July again for the past 12 years. So, in summary, yes, sales are slightly above where they should be for the month of July. They are up significantly from a massively slow July last year, but put into context, it's not really anything to write home about. Listings are up massively as well, as is the number of inventory sitting on the market. And while the usual suspects will obviously be out in full force telling us this is the beginning of the market heading to the moon, this is the beginning of a massive rebound, we've obviously been here before, where a small increase in the number of sales leads to all of the experts telling us that sales are about to take off. And maybe this time they're right, though their track record is awful, they're not going to be right tomorrow. There is still an awful lot of inventory sitting on the market, which means if you do plan on getting into the market, there's no need to rush out and buy tomorrow. Prices aren't heading to the moon by Thursday, and fixed mortgage rates, while coming down, are still higher than they were for the majority of the spring. How the London market will play out amid tariff uncertainty, interest rate uncertainty, and of course economic uncertainty remains to be seen, but we will obviously continue to track the London market on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, thanks so much for watching.